morning, everybody. How you guys doing today? Good morning, fib lover. I am a fib lover. Good to see everyone in here. Coams, nice to have you. Andy V, Ron, Netfa, Cav, Trina. Who's that? Shubham, good to have you. Sedano Hunter, long time no see. Victor, L, Joe. Good to have you guys. Welcome to the education room. Named yourself this time. Yeah, sometimes you got to pick your own nickname, right? Guys, it's good to have you in here. I'm excited for the day. Um, reminder, disclaimer, whatever you want to call it. This is an educational room, guys. Hey, what's up, motherfucker? Nice to see you in here. Guys, I'm not here to tell you what to do. I'm not that bossy boss person. What I'm here to do is help you learn to use these T3 indicators and get the absolute most out of them. Damn right, motherfucker. I am the boss of this room, but that's it. Then I get outranked everywhere else. We won't call trades, guys, but we will talk about chart reads. We will discuss expectations. And everything that we do is going to revolve around high probability trend trades. First thing I do each and every day is forget to open up the news page, but then I come over and I do it. And just check in to make sure that there's not high impact news. High impact news has the ability, the potential, the probability, it could make the market just a little bit crazy. Spiky, jumpy, erratic. And everything that I teach in this room is just a pattern, and it's a pattern that's predictable and testable and provable. And high impact news can disrupt that pattern. Do I have any idea what happened yesterday? I don't know. Yesterday was 24 hours long, motherfucker. You gotta be more specific. What we're gonna do, guys, we're gonna talk about the restriction of use. There were some challenges that came from Tradeovate that they said came from the CME that was a mistake. And a lot of countries got restricted. And then I think it took them an hour or two to get it back right. Yeah, I bet. Well, fortunately, we weren't one of the people that were doing it, so you would have been just fine with us. We're going to learn to read charts, guys. That's my goal each and every day. I want you to read charts. I want you to look at it. I want you to look at your charts, and I want you to look for advantages. It's easy to look for a trade, right? Guys, a trade is as easy as pushing a button. A trade really requires absolutely no skill, no thought. It's like saying, hey, I'm going to fall out of a boat and hit water. There's nothing to it. Just fall out of the boat. Unless it's in a parking lot, you're good. But when you start thinking about your charts in terms of advantages, you'll be able to turn those advantages into trades. And that's kind of what we do here. Chart reading, looking for those advantages, is about 90% of the day. About 10% of your day is actually trading. If you're trading more than 10% of the day, it's not a typical day, I would say. You're going to understand through your chart reading where the market is likely to continue. We're going to use that for entries. You'll understand where the market is likely to go. That's an outstanding spot to get paid. And you'll understand where the market is likely to stop. These are called termination conditions. You'll see about them. You'll see them long before the market gets to them. You'll have a pretty easy recipe to identify them. And then you just got to build up the restraint to not trade into them, because likely to stop areas can end trends. What we're going to do, whether it's NinjaTrader or TradingView, this is your methodology in the visual, guys. And it's one of probably 1,000 ways to trade the market. This is a pattern that you'll be able to prove wins more than it loses. That's an edge. That's saying, okay, I can take this 100 times, and I'm probably going to win 70 of them based on my study. So I'm going to do the exact same thing every time. So probabilities are laying in my favor. Markets produce trends. We've all heard that. The trend is your friend. Somewhere in that trend, there's typically a fight. Your rules are designed to pinpoint where that fight is most likely to be lost, and then the market continues in the direction of the trend. Now, guys, trend trading is letting the people in charge of the market do all the work for you, and then just catching that little blip. It's a blip and run, if you will. If you're on TradingView, guys, it's the exact same methodology. It's the exact same ideology. And what I'm teaching this morning is nothing new. This was on Nexgen's plan back in 2004 when online video or online education rooms became a thing. As we get into how the day is going to roll, I want to show you what I dropped in the room just a moment ago. I dropped in a KISS plan for TradingView and a KISS plan for NinjaTrader. Now, hey, what's up, Sergio? Now, these are the most remedial plans Nexgen could ever produce for you. These are the plans that are going to be designed to teach you to read your indicators. These are stepping stones in your learning journey. And I'm going to say it again, guys. What you have is a hammer, right? And I'm going to teach you to build a birdhouse first, but once you acquire those basic hammering skills, you're going to build more stuff. That's kind of how this works. This is your stepping stone. This is your foundation. And these trades that are in this plan are designed to optimize your chances of success. And you're going to craft a plan based on your personal goals, based on your ability to read your charts, and you're going to find a way to do things your way. Until you have that ability, guys, this is the path of least resistance to keep you focused on getting where it is you want to be. So I've dropped a KISS plan for both platform in there. I'm right in the middle of rules, motherfucker. I'm very proud of you. Good job. Everybody look. Guys, do me a favor. Big round of applause for Motherfucker taking that play out from Nexgen Pro Trader Funding. That's awesome. I'm going to get back to rules now. I lost my train of thought. The other thing that I give you are these spreadsheets, guys. These are Microsoft Excel spreadsheets. And this is the TradingView spreadsheet. It's got a look of the trades that are on the plan, some thoughts about management, when not to trade. There's a place for your pictures. There's a trade tracking sheet. You get the same thing for NinjaTrader, guys. It's the rules in green. When the rules aren't met in red, a whole bunch of client trades that you can go back and study this pattern. There's a place for you to build your plan. And then once again, there's a trade tracking sheet, guys. And the trade tracking sheet is one of the most important parts of the education process. So to get to where you really want to be, first we're going to learn the rules. I'm going to hand you the rules, whether you're on NinjaTrader, whether you're on TradingView, guys. I'm going to give you a rock solid plan that's going to optimize your chances of success because confidence comes from the memory of success. It'll be your job to simulate, to practice. Simulation is not trading, guys. Simulation is building up the muscle memory so that when it's time to trade, your body knows what to do, your brain knows what to do, your eyes know what to look for. The step-by-step path to getting to where you want ASAP is, guys, post your trades in the room. Say, hey, Mark, this is what I did. This is where I did it. And most importantly, this is why I did it. And as you learn to follow these rules, guys, you're going to make mistakes because you're human. And it's okay. We'll identify them. We'll focus on correction. The second thing is keep it simple. The plans that I gave you only have 2 trades on them. And the second plan, or the second trade on the plan that I gave you is first trade dependent. The lessons that you learn in the first trade are going to carry you to the second trade. And then, guys, once this KISS plan becomes a little second nature for you, you're going to start to see a lot of opportunity in the market. You've got to know what the pattern looks like, what the looks are. And once you learn that, the market is going to slow down a lot. And the more you study them, the easier they become. So we're going to do NinjaTrader and TradingView. I always start with NinjaTrader. Guys, we're talking about 3 rules. That's it. 3 things that you really need to learn to get the most out of the software. When a rule is true, so for example, when rule 1, strong triggers, is true, you have the advantage of momentum, which means that you can look at your chart and say confidently out loud, this is a trend that's going to be so hard to stop because of the momentum behind it, and that builds confidence. And then you're going to see that there are no termination conditions through rule number 2. None of those areas likely to stop the market. And you're going to look at your screen and you're going to say out loud with confidence, with all of this momentum and nothing in the way, I can't wait to go to find my entry with rule number 3. It's my favorite picture coming up right here. This is momentum and path, guys. This is the visual. When you have the advantage of momentum through rule number 1, you are a hopped up Tonka toy looking diesel that just has thousands of horsepower, and I don't care what steps in front of it. It's not going to do a whole lot. And when you have a clear path, it's straight ahead to the mountains, guys, until you hit something that can stop you. Once you understand momentum and path, you really do have the keys to the kingdom. Rule number 3 is nothing more than pinpointing right where the market is likely to bounce and continue in the direction of that momentum and clear path. So we're going to take these 3 rules, and guys, know where your rules are found. There's only 2 charts. And the first chart that you'll ever look at, and hopefully the only chart you'll look at until the first 2 rules are met, is your large chart. And your large chart is a very slow moving chart, guys. It's a very broad stroke of a brush. It shows the overall opinion of the market. And it takes the most current bar. That's it. Don't care what happened in the rearview mirror. Takes the most current bar to define direction, momentum, and areas. Your first 2 rules are met right on that big chart. When they're met, we're going to take an x-ray of that bar. And it'll start somewhere down here. And on a smaller, faster refinement chart, you're going to see that fight, that retracement. When everything down here says down, you're going to be, oh, wow, look, they're going up. You're going to pinpoint where that retracement is most likely to go. You're going to pinpoint where that move is most likely to fail. And you're going to use that precise location so that you can enter the highest probability trend trade that Nexgen teaches. And it's a trade that typically wins 70 to 80% of the time if you just learn and follow the plan. But that's up to you. We use these 2 charts because they're an awesome representation. Who's in charge? It's not me. I'm going to tell you right now, kind of a big deal, but I'm not in charge. Neither are you. The market doesn't even know we exist. Our 2, 4, 6, 8 contracts have absolutely no impact on the market. The people in charge are the big crowd, the institutions, the big money, the 1%, whatever you want to call them. They're going to create the trend. They're going to give you the advantage of momentum, and they are most likely to react at key areas that you're going to see on that big chart before the market ever even gets there, guys. They know when they're going to enter and exit. Now you do too, or at least where it's most likely. Your small chart is the small crowd. These are the hoodlums. They love to fight. They create what we call a retracement, a tiny push down or up against the trend. That's it. It's not a reversal of the trend. It's just a blip on the radar, guys. Rule number 3 is going to have you pinpointing right where the small crowd is most likely to lose their fight. This becomes the entry for the highest probability trend trade Nexgen teaches. And again, this is a trade that typically wins 70 to 80% of the time if you can sit on your hands and just wait for the rules to be met. We're going to use areas on both charts. This is your indicator rundown. Areas all have names. There is a divergence high and a divergence low. Divergence, anytime you hear that in my room, it means there was a loss of momentum. You're going to see Fibonacci resistance and support. You're going to see yellow 1-to-1s, and you're going to see mid bands. My favorite new phrase is that areas are bouncy, and it's fun to say bouncy. Areas are bouncy, guys. Whether it's a divergence high, resistance, 1-to-1s, areas are bouncy. Anytime the market reaches them, it may bounce. So we're going to use areas on the large chart to define where the large crowd's most likely to make decisions. We're going to use areas on the small chart to be that backstop to send us in the direction of the large chart advantages. We're also going to use triggers, and triggers will show up in everything you do. The only thing that you really need to know about triggers is that the small triggers are 2 solid lines that work together. They're a fast-moving average. And the large triggers are going to be the dashed lines. 2 dashed lines work together to create the large triggers. Triggers will be used to define momentum for rule number 1. Triggers will be used to define termination conditions in rule number 2. Triggers, specifically the large, will be used to pinpoint your amazing entry on that smaller, faster chart. Triggers show up everywhere. We're going to learn to read them. And we're going to do it with only 3 rules. So any questions before I get going into the rules, guys? We're going to break them down individually because the recipe for a trade is momentum plus a clear path plus an entry area. And once you learn this foundation, you're going to start to see a lot of variables to do great things with the software. That's it. There's your area. There's your bounce. That's a good visual. I like that. All right, large chart. Big chart, slow chart, large crowd, however you want to say it. We're gonna force them, demand that they give us strong trigger lines. And strong trigger lines have nothing to do with those areas. And strong trigger lines have nothing to do with these price bars. And strong trigger lines have nothing to do with your desire to be rich, guys. Strong trigger lines is one look in an uptrend. Small triggers are above the large triggers. The separation between the two, no matter how large or small, says that you have strong triggers. In a downtrend, smalls are below the large. The separation between the two, no matter how big or small, says that you have strong triggers. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. And you're going to see it annotated on charts a lot. Odds favorable momentum, OFM. It's going to be hard to stop a large chart with this force behind it. This is the look that we're going to rely on to break key areas. And guys, when you have those strong triggers, it's even going to change your plan a little bit because you're going to learn to trust momentum, and you'll probably see a lot of that in the room. So separation is strength. Pretty simple. If there is no separation, there is no strength. And if there is no strength, if they are not strong, they are weak. And if they are weak, anything can happen up or down. And guys, this is really one of the easiest lessons. I can look at my most current bar. This is crude oil. And I can say that the smalls are not separated from the large. This is weakness. This is not a market where the odds are favorable for the market to continue up. Does that make sense, guys? We're looking at it on the most current bar. That's all it takes to define rule number 1. If we go to the S&P, let's see. I'll be damned. How's that for a good lesson? On the most current bar, the smalls are below the large. There is separation. Separation is strength. Can you guys give me a Y if you see? Rule number 1 is met on the S&P currently. This is a market where the odds are favorable for the market to continue down. It really is that simple. Has nothing to do with fibs. Has nothing to do with price bars. Guys, it is one look. So momentum is awesome. Momentum pushes a market and can break areas and covers mistakes, but momentum is just 1/3 of the equation. When we have all that momentum, we have to make sure that there's nothing in the way, that the market hasn't gotten somewhere that could create a bounce or a reversal. And we're going to call those termination conditions. And just a friendly neighborhood reminder, termination conditions are lines on the large chart, horizontal lines, where these guys and gals are most likely to make decisions. So when they get to an area, whether it is divergence high, resistance, or 1-to-1s, the market's trending up, they've reached an area of resistance. Or if they've reached Fibonacci support, yellow 1-to-1s or divergence low, the market has reached an area of support. And when the market reaches one of those areas, we're going to let the trigger lines tell the story. So to define a termination condition, this is what we're going to do first. We're going to define when the rules say no more trades into that area. If price reaches resistance, ask yourself where the triggers are. Where are they? How many triggers have made it through that area? And the answer is 0. No small triggers, no large triggers. It's a big goose egg. That's how you define a termination condition. Price reaches Fibonacci support. Where are my triggers? They all remain above. Rule number 2 is not met. Absolutely no trades into that area. Does that make sense? It really is. If you learn the phrase, price reached an area, where are my triggers? Price reaches divergence high, where are my triggers? Price reaches yellow 1-to-1s, where are my triggers? Price reaches a divergence high, where are my triggers? That's all you have to do. And you're going to be able to say to yourself, man, I don't want to start a trade right into that line. That line could reverse the market. It could stop forward progress. It could create an untradeable bounce. Or honestly, it could even break. I have no idea. So what I do is if price reaches an area and none of my triggers break, I just sit on my hands. I wait for the reaction. I let the large crowd tell me what they want to do at that area. I don't try to predict. So this is, every time you hit a line, you're going to sit still for just a moment and you're going to have this calm and you're going to say, you know what? More often than not, when price reaches an area and none of the triggers break, that area produces a loser. And that's it. That's why we don't trade into them. Because of thousands of hours and thousands of pictures, we have determined that your advantage is gone when price reaches an area and none of the triggers break. That's why rule number 2 is a thing. If it's going to break, your trigger lines will tell the story. So we're going to count triggers is the easiest way to do it. If price reaches an area, how many triggers got below the area of support? If the answer is 0, it's a termination condition, your highest chance of success. Not the only thing you're allowed to do, but your highest chance of success comes from doing nothing, waiting for the reaction. Rule number 2 is not met. Therefore, if you're following the KISS plan, you don't have a trade. Now, if your small triggers, both lines, smash through that area of support, but your large triggers haven't made it through yet, this is what we call a 50-50 look. This is a look that says, with all of that momentum, because that rule's in play or we wouldn't even be looking for number 2, with all of that momentum, Fibonacci support does have the potential to break. Now, the second trade on the plan that I gave you revolves around that potential. In the plan designed to optimize your chances of success, it says let 3 of the 4 trigger lines get through that area. That's when the breakout is more likely to happen. But it's not until all 4 trigger lines get below that area of support that we consider that area broken, that we can exclaim at the top of our lungs, my path is clear. This is when we're looking for the best of the best entry. And your path will remain clear until you hit the next line. So if we go back and look at the S&P again, where's my big chart? You can see that right now 2 triggers have made it through these yellow 1-to-1s. We could say because of the momentum, it has the potential to break. Does that make sense, everybody? 2 triggers made it through Fibonacci resistance, but they went head first into a divergence high. None of the triggers broke, and that's where the reversal comes from. 2 triggers, weak potential, didn't break. Almost 2 triggers, weak potential, didn't break. 2 triggers, didn't break. And look at this, the market moves in patterns. This look happening right now is the same as the one that we just looked at. So we're trading patterns, we're embracing probabilities, and we're just saying to ourselves, I don't have to trade into a yellow 1-to-1 if none of my triggers broke. That could reverse the market. I'm not obligated to take a trade hoping an area breaks with only 2 triggers through. That area is less likely to break than it is to reverse. So get in the habit of counting triggers. Triggers will tell you everything that you need to know. If price reaches a line and 0 triggers break through, your plan says absolutely no trades. Big red goose egg. If only 2 triggers smash through the area, your plan, if you're following the KISS plan, says absolutely no trades into that area. And all of you are going to ask me, but Mark, how do I take a trade with 2 triggers through? And I'm going to say you're going to write your own plan because the plan I handed you says no. Now, if 3 of the 4 triggers through, you're going to say, all right, this thing has the potential to break. That's the best potential for a breakout. I will capitalize on that if my entry rules are met, but because it's not a clear path yet, I'm going to manage it a little more assertively than I would if all 4 triggers broke and I had a clear path. And guys, all you have to do is count triggers, and it'll tell the story. It'll let you know exactly what the most likely outcome of that line is. And there will be times When areas are stacked, multiple supports, multiple resistances, there will be times where you don't have odds favorable momentum, guys. This really is 90% of your day. Just for reference, I woke up at 5 a.m. Eastern this morning. Before class, I only took 2 trades. 4 hours, 2 trades. Probably spent 3 to 4 minutes in the market. That's it. Already reached my goals. It's not every move that you need. It's not every tick that's yours. It's not every up, every down. You don't have to be the first one in or the last one out. Guys, this KISS plan is designed to give you, to teach you the best of the best entries. And it only takes, I love doing this because I didn't realize this. It only takes $400 a day consistently to put yourself in a 6-figure income based on your trading. $400 a day. So what I'm handing you is the path of least resistance. The futures markets trade billions hourly. The S&P exchange is about $174 million a day. You don't need it all. Get your share. Give the easy stuff. Let the big crowd do the work. Collect what's yours and focus on the advantages. So, rule number 1, strong triggers. Is everybody good with that? Separation is strength. Did I save that picture? I made a picture that I wanted to share with you guys. I believe I did. I may have. I probably didn't. Dagnabbit. Separation is strength. Rule number 2, terminations false. Room to targets. Clear path. Momentum and path, guys. Once it's there, rule number 3 is going to blow your mind on the accuracy. Rule number 3 is going to have you pinpointing where the market is most likely to continue with that momentum and path. Good morning, Nubis. Good to see you back. Glad you can hear. Hey, Nubis, if you ever can't hear, post in the room, man. Say, hey, Mark, I can't hear you. And what I'll do is we'll run a check in the room, and I'll ask everybody. I go, hey, cool kids, can you hear me? And you'll see a bunch of yeses. And then we'll do a little troubleshooting. Maybe I need to reboot. Maybe you need to reboot. No, always disturb the flow of class. I have no flow. This class, and I'm glad that you put that. Guys, interrupt, disrupt, post pictures, post questions. I mean, my goodness, this is your classroom. I'm good at this stuff already. I want you to be good at it. So we have momentum. Our path is clear. We could look at this picture, right? The large crowd has said, here we go, we're going up, life is good, everything's strong, and we're going to go wait for the small crowd to do their thing, guys. And the language for entry is so specific. This is a phrase that if you refuse to learn it, if you convince yourself you'll remember it because you watched a video, you may miss some entries. But if you learn this phrase, I'm going to use a limit order, meaning I'm literally going to wait for the market to come to me. And I'm going to buy or sell a pullback. And the pullback is just that silly little fight from the small crowd. Everything says up and it's just a little down. It's not a reversal. And I'm going to buy or sell that pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1. Why? Because areas are bouncy. And that area will be inside of large triggers. Because large triggers will define where that retracement is most likely to go. Large triggers will define precisely where those areas need to be. And guys, your entry pattern is just that. It's a pattern. And your trend trade entry will look the same every time. When everything is going up on the large chart, when your guts are telling you that you're never going to get paid, when the fear of missing out has just gripped you around the throat and is trying to choke a trade out of you, the small crowd shows up. And that little fight begins with a reversal bar, a down bar. Guys, this is a pattern. It happens all the time. This reversal bar is not your entry. This reversal bar is a pretty cool little loss of momentum that hopefully takes us to our entry. And when it happens, and even before it happens, once you get comfortable, these large triggers, smooth or stepped, guys, 2 dashed lines. Large triggers define where this retracement is most likely to go. So from somewhere, from the top of the line to the bottom of the line. I don't care if it's large over synthetic, synthetic over large, just call them large triggers. They define where the retracement is most likely to go. So that bottom line is the line in the sand. That's where we don't expect it to go beyond. The areas inside, fibs, midbands, or yellow 1-to-1s. Those are the areas where price is most likely to bounce, to continue with all of the large chart advantages. Sometimes there's one line, sometimes there's 8 lines. Doesn't matter. They all matter the same. The plan says activate your limit order just above the highest point of support inside of triggers, all caps. This is where the market is most likely to bounce and continue with the large chart advantages. And why do we do the top and not the bottom? Because your large chart is in a definitive uptrend, because your large chart is screaming to the upside with odds favorable momentum, and your large chart has absolutely nothing in the way to create a bounce. You have latched on to momentum and path. Why does it bounce off the yellow 1-to-1s? Like, what is it? So Coambs, the yellow 1-to-1s are a 100% Fibonacci alternate. That's the technical term. Good question. So let me show you how they're created. We'll just pull up a live chart real quick. And let me find an example where I can do the math. Here we go. Because I'm not very good at math. I hate to admit that. So are you familiar with Fibonacci? And that's what everything is rooted in here. So check it out. Oops, sorry, wrong direction. Clearly, I'm not as good as you are. We'll do the, no, not the extension. We'll just do that one. So, as you go through and you do these Fibonacci calculations, what these yellow 1-to-1s are, and maybe it's more Elliott wave. Have I mentioned I'm not a tech guy, but let me show you what it means. When the market creates this move right here, and someone told me this is Elliott wave, and then it retraces, the distance of this move is that right there. That's what creates these yellow 1-to-1s. So it's a 100% Fibonacci alternate. And 100% Fibonacci alternates are used by the people that run the business, that run the show. And they happen not only on the large chart, but they also happen on the small chart. And the one thing that I really like to stress in the beginning of my classroom is that areas can create bounces. These are areas, these are lines on a chart that have already been created by previous price action. And the large crowds respect them because they're who created them. And you get to see them on your chart, bold as day. These are the areas that can create a bounce. Does that make sense? Cool. And when we talk about the entry logic, one's not stronger than the other. This is so important. One area isn't more likely to create a bounce than another area. So you don't have to worry about ranking or sorting or prioritizing. One area is not more likely to create a bounce than the other. But the methodology incorporates a couple different things. So the reversal bar starts the pullback. And I can say without hesitation, that pullback is most likely to go somewhere from the top of this line to the bottom of this line. So I can gauge where those down bars are more likely to go down. And I can also say that the areas inside of those triggers, whether it's a fib or a 1-to-1 or a mid-band, these are where the market are most likely to bounce and continue in the direction of the trend. Now, Coambs, I don't know if it's going to be the mid-band. I don't know if it's going to be the 1-to-1s. So what we do is we make sure we don't miss a trade by getting in at the highest point. That's what the methodology says. Get in closest to the reversal bar, because wouldn't it suck to wait for a trade down here only to have it bounce up here? And what what the entry logic does as well, by letting you know where the market is most likely to retrace, by showing you precisely where it's most likely to bounce, you're also defining where the market should not go. If this is going to be one of those winners, one of that 70 to 80%, they shouldn't be able to push through the areas inside of triggers. They shouldn't be able to blast through the triggers, which means that any line, fib, midband, or yellow 1-to-1 that is below the large triggers is not an area for entry. Once you get past that retracement zone, you don't know if, when, or where that market is going to continue up. The same is true in a short. Oh, you'd be amazed at how well respected they are during news, Nubis. When was our last big news release? Yesterday, 8:30? Is that right? Was there news yesterday at 8:30, guys? Oh, at 10? Did it react? Did it do anything? I don't remember. I was teaching class. Let's look. There you go. 10 o'clock news, directly into Fibonacci support, no triggers break, launches it all the way up, and the news-driven chaos ends directly at a fib, Nubas. These areas are respected because they are created by the people that move the market. And it's the coolest thing ever, because we know when we shouldn't go long, and we know when we've lost our advantage going short. And now we know how to capitalize on the advantages by waiting for a pullback to an area inside of triggers. Reversal bar begins the pullback. Trigger lines define the retracement zone. Area inside of triggers defines where it's most likely to bounce and continue in the direction of the large chart advantages. Absolutely no trades are taken from the wrong side of the triggers beyond the triggers. Guys, that's where your initial stops will be, where the advantage of rule number 3 is no longer in play. Beyond the retracement zone, beyond the areas within it, guys. This is where new users have to learn a very difficult lesson. Experienced traders don't even flinch, but new users, I have to remind you, anything that wins 70 to 80% of the time, it must lose 20 to 30% of the time. If anyone ever tries to sell you some bullshit, oh, you can win 100% of your trades, run. I'm not going to tell you that. I'm going to tell you, if you latch on and you focus on the process and you trade a pattern that you can prove through study, through back testing, typically wins 70 to 80% of the time, what we're doing is we're trading probabilities. We're trading the idea that if we never deviate from the methodology over the course of time, over 100 trades, 20 trades, 50 trades, we're more likely to win more than we lose. Which means that if we manage our trades, we shouldn't have too many difficulties becoming profitable traders. Now, management is very dependent on great entries, and that's the second piece of the puzzle. So it's imperative that you learn the great entries first, guys. And this methodology shows you exactly what to do when the momentum is there, when there's at least the potential to break. You're going to buy a pullback right at an area inside of triggers, the same way you were able to on November 6th of last year, the same way somebody did in 2021 using the exact same software with the exact same checklist, and the same way somebody did it in 2022. And if you go through these client trades, click on a random one, and let's see if it opens. Haha, with momentum and the potential to break, there's a pullback to an area inside of triggers. Nope, Nubiz, you can't. No way. Yes. Yes, Nubiz. If you trade after hours, bring it to class. If you can't make it to class, bring it to class. If you do market replay and need feedback, bring it to class, man. That's what class is for. So hell yeah, I want to see everything you've done. So we're learning patterns. That's all it is. That's NinjaTrader. I wish I could make it more difficult. And I have had people tell me, Mark, 3 rules on 2 charts isn't enough. And I always say, but isn't it? Let's see if we can find one of those potential to break looks at least. Boom, boom, boom. Here we go, just for grins. All the momentum, potential to break. Let's go see what that circle looked like on a smaller, faster chart. That way it's not me pulling pictures and saying, hey, look, the market always does that. This is literally scrolling back and seeing what the market did at that spot. Almost there. Oh my gosh, it pulled back to support right in the retracement zone. And then it launched off into the galaxy. And if I back up here, potential to break, all the momentum, son of a gun, right back to an area, right inside of those triggers. And if I back it up again, there's another one of those tails. That's that fight on the smaller chart. Oh, they missed my mid band, and I probably didn't get paid on that one. So guys, all we're doing here is recognizing a pattern, proving with a little bit of study that that pattern wins more than it loses, and then learning how to commit. To say to yourself, I don't have the momentum I need to look for rule number 2. And if I still look for rule number 2, I don't have triggers through all of these areas, and these areas are more likely to create a bounce than an arbitrary break. So I choose to wait for the reaction. Everybody good with that? That's NinjaTrader. 3 rules, 2 charts. I know I make it sound simple, right? Oh, he makes it sound like everybody should get this. Guys, if you're brand new, welcome to Nexgen. You got to learn the language. You got to learn what an area is. You got to be able to recognize a trigger line. You've got to take those concepts, those 3 very basic concepts of momentum, path, and entry, learn them individually, piece them together, create the perfect trade, learn how to take the perfect trade, and then grow. Just grow. You're welcome, man. I love teaching. This is what I do. That's it. That's what it feels like. Guys, I've been there. I've been new. There is nothing. I had a manager when I first started running restaurants. I had a manager tell me, and forgive my French here, but I'm going to go ahead and drop an F-bomb. Cover your ears if you're easily offended. He said, Novak, there is nothing you can fuck up that I can't unfuck. And I know that's a little crude, and I apologize for you sensitive people, but he was right. He said, don't ever hide a mistake from me. I'll teach you how to fix it. I'll fix it myself if I need to, and we'll be better for it. And guys, it was the greatest coaching I ever got in my life from that guy that acted as my mentor. He gave me carte blanche to be wrong and then to learn how to fix it. And you guys have the exact same thing in this room. Let's go to TradingView. TradingView is very, very similar, but just a little bit different. A lot of you prop firm folks are using TradingView, and it floors me how you use it on just price action. I was looking at charts the other day. Mine are a little busier, but they're probably a little more precise. We'll see. Guys, the trend trade on TradingView is only 3 rules. Once again, only 3 rules. I need you to learn 3 things and learn how to take this one trade so you can start to see the rest of the trades. It is not trading directly into areas, and then it's not trading directly into areas. A little redundant, right? And then it's buy or sell a pullback in an area, because areas are bouncy, guys. Only takes 2 time frames, 2 charts, big chart, little chart. Why do we use the little chart? Because it reduces risk, because it maximizes profit potential, guys. That's why. Could you do it on just a big chart? Of course you could. Could you do it on 17 charts? Of course you could, but boy, that's confusing. The way it's taught us too. There's a big chart, 15-minute chart. Guys, it's so slow. It is so stinking slow. It'll define direction, momentum, key targets, and terminations. And then there's a 1-minute chart, and it's way faster than the 15 times actually. But it's still pretty stinking slow. It'll define the immediate strength using small triggers, and it'll define your entry points. It'll show you right where the fight's likely to be lost. Your large chart has small triggers on it. Your large chart doesn't have large triggers. Your large chart doesn't have background colors. Guys, I took the village idiot approach to learning this software, this new platform, because I came from NinjaTrader, and I stripped everything off of this that isn't necessary to follow the rules. So you're going to have small triggers on the large chart. You will have small and large triggers on the small chart. The second trade on the plan is what we call a momentum trade, and it's dependent on that separation of strength mentality. And you'll have areas. This is where I see if you're listening. Someone give me a word to describe areas, an adjective, if you will. I have no idea, Rithwick. I have bouncy. Thank you, Nubis. Rithwick, I have no idea. I have no idea. Support and resistance is a good one too. And it's crazy, and I know it sounds silly, but guys, I can't program. I failed college algebra 4 times. I am a right brain English lit major, worked as a tattoo artist for a decade kind of guy. So patterns make sense to me. If you need it more technical, reach out to John Novak. He loves to talk technical. Guys, you're going to have areas on the big and small charts the same way you will. And areas are bouncy. You can use them for targets. We're going to use them for entries. And we're going to use them in correlation with those triggers. And we're going to define the ultimate trend trade. One of my favorite things is people that try to find all the entries and struggle. And when they take a deep breath and they take a step back and they say, oh my gosh, I don't really need all those trades. With 3 rules on 2 charts, most of you can find the success that you're looking for as a day trader. Guys, to take a trend trade, there's only 3. So first you define the trend. You make sure your big chart's not trading in anything. You make sure your small chart's not trading anything. And then you go grab hold of that perfect entry. And that's what we're going to do. So trend is defined on the 15-minute chart, the big chart, the slow chart. And it's nothing more than up or down. Your small triggers will define the trend. So my small triggers are down. My trend is down. I prefer brunettes, Sedanio. Just me. Just my thing. I don't have a preference. To be honest with you, I can trade either of them very comfortably, very confidently. If you prefer a market that moves a little slower, if you don't like the speed of Renko bars, TradingView is awesome because your entry rules, I don't know if you can see it. I always project my eyes. Your entry rules will demand that counter hit 0 before you enter. So for you jumpy sorts, TradingView is pretty cool. And I'll show you how to use that in just a second. Most of my personal trading, Sedanio, is trading the same trend trades that I teach you guys in the room every day. I do it on NinjaTrader, but I don't have a preference. I think, you know what my preference is? Are you ready for the stupid answer? My preference is that you pick a platform and follow a plan. Have rigid rules in the beginning so that you can learn how to use whichever platform you choose, and I'll teach you how to do it. So let's define trend with the small triggers. They're either up or down. And then rule number 1 says from wherever you're going to enter that market, don't trade directly into trouble. Don't take a trade with no room before you hit an area on the large chart, whether it's a zone, support and resistance, whether it's an outer band, whether it's a mid band. I would say that, V-Troy. I would say that. I've never had TradingView crash on me. That's one of the reasons that when Nexgen Pro Trader Funding decided to go live, we chose not to go with the NinjaTrader platform, but rather build it through AMP Futures, who's been the #1 rated futures broker for like 20 years straight. And do it on TradingView because it's got like 100 million users. And it's pretty cool. And Nubis, I don't give advice. The rules for funding say don't trade during news. My own personal plan says don't trade during news. And if there is a government shutdown, all news becomes tentative, which means you don't know if or when it's going to happen, which means just trade your plan and hope for the best. Rule number 1 says don't walk into a brick wall. That's okay. Don't be sorry. You're fine. I'm obligated by law to say that whenever anyone says the A word. I don't give advice. I don't do that. I'm not a financial advisor. I'm an educator teaching you to read indicators. Rule number 2 says from wherever you take your trade, give yourself room to trouble, because if you go long directly into resistance, even on a 1-minute chart, resistance is likely to create a big ugly bounce to ruin your good time. Same with support. So the first 2 rules are 100% focused on making sure you don't trade into something that could create a bounce. They're the exact same rules, it's just on 2 different charts. The entry pattern is consistent. So this would be for a long trade, which means that my large chart small triggers have told me that they're going up. I choose to go up with them. My large chart has room to trouble. Now I'm on my small chart. And yeah, these are purple 1-to-1s. Those are yellow 1-to-1s. That's a mid band. They all do the same thing, Nubis. They can create a bounce. It's different between NinjaTrader and TradingView. On NinjaTrader, these purple 1-to-1s don't carry the same weight unless you're a NASDAQ trader. On TradingView, I respect them with everything I have in me. Rule number 3 says buy a pullback at an area, which means that when everything is going up, I need the fight. The fight starts when the small triggers roll down, when the large chart says up. That's the beginning of the fight. And once I get the fight started, I start looking at every area of support lower than that fight, because I don't know which one's going to create the bounce, which is why in TradingView, we do not wait for the market with a limit order with this methodology. When price reaches an area, your entry signal, your reason for going, is an up bar in this long trade, and both corners, and this is so important, both corners of that up bar finish above the triggers, on the trade side of the triggers. This is where the small chart is most likely to bounce and continue in the direction of the large chart advantages. It's the same look either way. If I were waiting for a short trade, it's not getting in at the area, it's getting in with the down bar that finishes below the small triggers, because reversals tend to come from what we call the weak side of triggers. And as long as I'm on this side, the left side of triggers, there's a good chance I'm getting run over at the area. So it's just the pattern. Once again, small triggers are up on my large chart. It lets me know that the trend is up, and I have made the choice as an individual trader that I will only go up with the market. I'm trading the KISS plan, and this is my direction. My second question is, do I have room to trouble? If I choose to take an entry, do I have room to make money? And here's the cool thing. And this is where I got to remind you guys that you're the only ones in charge. If the answer to room to targets is no, go toast a bagel, right? You're more likely to lose a trade trading directly into an area than you're not. Why would you take the trade? But if you do have room to targets, let's wait for the reversal. I think this is a good one to remember. Because the smalls rolled down, my rules say wait for a pullback to an area with a close on the correct side of those small triggers. So there's my pullback, and the pullback from the time of the reversal, or the triggers rolling, 1, 2, 3, 4, 5, 6, 7, 8 minutes. It was an 8-minute wait to get this entry. 8 minutes where I had to do nothing. 8 minutes where I got to relax. Shoot, 8 minutes where, I don't know, maybe I played with a dog. And then once I get that reversal bar up and that close above those triggers, I'm in. I am 100% sold on this trade because of my large chart advantages. This is where the small chart is most likely to reverse and continue in the direction of the large chart. Going the other way. Triggers are down, I'm going down. Room to trouble, can't wait to go look for an entry. Because the small triggers roll up, I'm already feasting my eyes on all the areas of resistance above me. And when it gets there, I'm so calm. And I'm waiting for this bar to finish below those triggers. I'm literally watching a timer, counting it down. 5, 4, 3, 2, 1, sell. And this is where that small chart is most likely to go back in the direction of your large chart advantages. And guys, it's just a pattern. So when you pull up TradingView, first it's down, then it's room to trouble. And because the small triggers rolled, my rules say, wait for a close on the small side of the triggers. Now, give me a Y in the room if you see that they went headfirst into one of those zones, one of those bouncy things. Do you know what that means? It means that my rules aren't met. It means that I've got a higher chance of success in the long run by simply skipping this trade and just not giving a crap what happens next. Go make a bagel. That's what my plan says. My plan says no trade, which means I gotta be cool with the idea that I'm not gonna catch every move. My job is to catch the best moves. My job is to catch the highest probability moves. My job is to put myself in a position, regardless of which plan I'm trading, which platform, to put myself in a position where I can say confidently, this is a pattern that wins more than it loses. I can't wait to enter the market. Win, lose, or draw. That's my trade. And now management, I mentioned management. On TradingView, you'll know how you're going to manage your trade before you ever enter. And it's a simple comparison. So when I look at my large chart and I go, hey, my small triggers are up, I'm going up with them. When I look at my large chart and I say, hey, I got room to targets, let's go look for an entry. I make a quick glance when nobody's looking. I side eye that big chart. And I say, well, where is the most current price trading in relationship to those small triggers? And it's either left, right, or inside. Those are the only options. If you are a little bit left and a little bit right, you're right. And if you're a little bit right and a little bit left, you're right. Always, always round down. Trust me on this one. But what happens is this kind of tells me the push and the move. It kind of gives me a little momentum indicator. If I'm on the left side of the triggers, that's the strong side. That's where 1 minute areas are more likely to break. Not guaranteed to break. You still, the rules say don't trade into them. But if I've got some room to it and I get there, I might not take an exit. I'm going to gauge things because that's where bigger moves happen. Now, if I'm on the right side of the triggers, that's the weak side of the triggers. Because these large charts are so slow, I'm still looking for long trades, and I don't have any qualms about taking a long trade from the weak side of the triggers on this big slow chart because it can go from weak to transition to strong. But on my smaller, faster chart, if something's in the way, I'm getting paid. I'm going to get paid and I'm going to GTFO, and I'm going to wait for the next great trade. Now, if I'm in transition, not quite strong, not quite weak, this is where I may choose to take partial profits at the first sign of trouble, maybe get to break even, but see if they want to go ahead and push and turn into strong triggers. So this is kind of my, I'll take some, but let's see if it runs look. And if you learn this, guys, you're always going to know how you're going to manage a trade. And look at that. Areas break, right? Sometimes they do. And now they're just screaming down with reckless abandon because the market just opened, well, not too long ago. And the NASDAQ is an angry, angry market for new users. And the S&P is flying down, and I'm on the strong side of the triggers. And I've got not a lot of room. Well, now I have no room to the outer band. And they're on a big old run right now. And guys, every move doesn't have to be your move. Every entry doesn't have to be your entry. Every tick doesn't have to be your tick. When it's only the potential to break, learn how to trade it. Are there any questions about NinjaTrader, high probability trend trade? Are there any questions about trading? Wow, look at that. Who did that? The area did break, didn't they? And it happens sometimes. Will there be a sub fib upcoming for TradingView? Oh, an auto fib. Sorry, Bushy Schwartz. Um, right now the programmers say no, they can't do it. So that's the answer I have to give you right now. You want to see something cool though? Do you have both platforms and you're just trying to figure out which one to use? The methodology is solid for either. I'm going to tell you that right now. But check it out. Watch this. At 7,004, I have a fib. At 93, I have a fib. It's not uncommon. It's not uncommon to see people do that. What I use, Bushy Schwartz, that's hard to say really fast. I use a company called Chart Prime. See these areas of support and resistance? It's about $50 a month. And I have never blinked at spending $50 a month on a tool that I feel gives me such an advantage. So there's Chart Prime that does have a little cost associated with it. But you can see they're pretty solid in pinpointing. Buzzy, we'll go with Buzzy. Gotcha. Don't yell at me. Just kidding. Roller coaster. And then Buzzy, if you're like, man, I'm evaluating, and I get it. I hate it when someone's like, hey, try this, and I'm like, cool, I'm excited to try it. They're like, just give me your credit card and $80 and then we'll cancel it. Well, that's kind of, I don't like that. So there are a couple free versions. The dynamic supply and demand, the Algo Alpha, are pretty good. They're a little resource intensive, but those are pretty solid. And there are support and resistance from flux charts. My 2 cents is they're pretty accurate, but they're so far apart that I think they're probably better for people looking for bigger swings. And what we do is so precise. I prefer the supply and demand, but that's my 2 cents. That's opinions are like, you know what, you get it for what you paid for it. So, man, look at that. Just rocketed. But I'm not in sales. I'm in chart read. Do you guys see how it's down? How they're coming up on the area, so there's not a lot of room. So here's a cool thing you can do. Is watch this. That's the area in question, right? If they pulled back to an area up here, I'd have tons of room to get back. I'm kind of rooting for a little bit of a bounce and a pullback. We'll see what it does. Guys, I'm going to take just a couple minutes. Look at that. That's the S&P. Where are we trading? Look at, that's what we call a strong trending market. And you guys want to see something awesome? Who are my NinjaTrader users? You'll love this. I think it's very predictable, Cav. I think it's very predictable. So check this out, guys. And tell me if it's just me being biased. If I take this picture, do you guys see the reaction from the area? It's not a mistake that there's a big retracement right at the area, that the push down comes from the area, that there's a bounce, that would be one instance where it didn't really happen. That there's a reaction. When it hits the fib, do you see the tail? That's the reaction. When it hits the next fib, that's the reaction. Guys, somebody's trying to do something at these areas. They know about them. That is the sweet spot of what we do. We know about them too. And now we're just developing the patience to kick back and relax a little bit and let the large crowd tell me what they want to do at Fibonacci support. Do they want to give a little blip and run like they did on the last two? Or is this going to be the one that holds it? Hell, I don't know. I don't know. Cav, the NASDAQ is fast, but I still think it's predictable if you learn the patterns. I'll say that. People say that you can't predict the market. I think you can, to a degree. But it involves all the pieces coming together to do it well. So, guys, I'm going to take 5 minutes. Go stretch your legs. Nobody should ever sit in front of a computer for 5 hours straight. I firmly believe that. When I come back, what we're going to do is what we did yesterday and what we're going to do tomorrow. We're going to look at the charts that you guys post in the room. Here's what I ask. If you're new in my room, go screw up a million things. How's that? There's your blessings right there. Go make as many mistakes as you can figure out how to make. And what we'll do is we'll learn how to correct them, because when you know what not to do, it's easier to do what's right. So if you take a trade, talk about the momentum that you see and tell me what you feel about the terminations. Describe your entry and let me know how you're reading your indicators so we can make sure that you're reading them properly. And now when I'm talking to my newer people like Moonwalk, even if you don't want to take a trade, watch this. You can take a picture and you can draw an arrow and you could say something clever like smalls above large, space between, rule 1 met. Do you guys see that? I didn't take a trade, but now I'm one picture better. One picture better about identifying momentum. And I didn't talk about fibs or bars, just the space. Guys, take those pictures. Go to the spreadsheet that I give you. Drop it into the strong triggers. And I dare you to take 25 pictures. 25 pictures of the same thing with solid annotations and not get good at that thing. I don't think it's possible. Your default ES charts were 13.2 and 5.1. You use the default NASDAQ. Can you explain how those time frames are different, what each number of the Renko bar means? They're just bigger time frames. They're all in the Fibonacci sequence. They're all in the Fibonacci sequence. So 13.2, and my ES is 13.2. Only my NASDAQ is 34.5 and 13.2. So here's what it means. Dun, dun, dun. Let's take a big old picture. I have to find a reversal bar for it. This is a 13.2 bar. So 13 is the middle. If it makes 13 ticks up plus 2, I get the next bar. If it makes 13 ticks down plus 2, I get another down bar. That's all it is. It's describing the ticks within the bar. The 5.1 is the same thing. It's a 12-tick bar total. And because the NASDAQ is about a bajillion times faster than the S&P or crude oil, we created the time frame 34.5 for the large chart and 13.2 for the entry, because the NASDAQ is crazy fast. And if you tried to trade it with a 13.2 and a 5.1, I think 99% of the world would find it untradeable. Does that answer the question? And you could probably, let's see. When it comes to technical questions, I always want to make sure that you get the answer that you need, because I'm really not that technical. But if I go to the trading guide, and let's see, dynamic Renko. Let's see if John Novak, indicator descriptions, the indicators. Now I'm just curious, right? Master B, there's a million of them out there. Do you want Snagit, which is like 30 bucks a year? Do you want Microsoft Snippet, which is free, but you can't do text on, so you've got to open it up in Paint to put text on it? Which one would you like? Here, I'll give you the link to the one I use. because all the cool kids want to be like me, right? So I use TechSmith Snagit. It's $30 a year, and it has every bell and whistle I could ever hope for. Small investment for a pretty wonderful tool. You can even take videos with it. You're welcome. So here's your NASDAQ, Robert Mart. This is a 13.2 over here. And if you just watch it for a second, you'll be like, oh my gosh, that's crazy fast. Imagine that a third the size with so much fewer ticks. It is mayhem. And that's one of the reasons I don't teach on the NASDAQ. Momentum is still momentum. Termination conditions are still termination conditions. Oops, I don't even have a thing in there. Pullbacks to areas are still pullbacks to areas. And reaching a line is a great reason to get paid. Pretty cool, right? Live. But boy, that was fast. If you're brand new, that's too fast. There's no doubt in my mind that's too fast. That was a beautiful trade. Man, I wish I would have been set up. That's okay. So we go and I teach on much mellower charts. This is crude oil. And crude oil has momentum and a 2-trigger potential to break. And there's your first pullback to an area inside of triggers, and now it's doing it again. And I'll leave you guys with this. Let me know what happens. I'm going to stretch my legs for a second. When I come back, we're going to look at your charts, guys. Back in a few. Second hour. Let's have some fun. I am going to click. I know Paul had to go take care of appointments, but there's probably good lessons in here. So I'm going to go ahead and click on his. I think we're going to have time. There's not a ton of pictures today like there typically is. Let's see. Boom, boom, boom. Bump, 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 bump. And it's funny that Paul left and 90% of the pictures are Paul's. That's okay. We'll keep the lessons brief. Let's see what we do. Almost there. Got one from Miss Trina. Master B dropping them in. Nathan with a little bit. And boom. Cav, have a good one, brother. All right. So here we go. This is feedback time, guys. I'm not the trade police. I don't want to be the trade police. We're just going to talk about how these charts fit the plan. Why are those charts different from the usual candle ones? Which charts are we talking about? These? Cool. So Rithwick. These are Nexgen's dynamic Renko bars. They're Nexgen's variation of a Renko bar. And what they do is, man, they smooth everything out. So every bar is uniform in how it's created. It's not time, it's ticks. And what it does for us is it allows us to be super precise and define entry points and minimize risk dramatically with the methodology. And then the ones that you're looking at that look familiar are the minute bars on TradingView. So they're two different platforms using two different bar types, which is why I cover both in the room, because some people like the speed of Renko and some people prefer the mellow of minutes. So it's just different. And then Paul says that the 15-minute is down. He also says that it's transition and he has a clear path. And he went short. And they stopped him right out. And he just refused. Oh, there it is right there. There's the exit right there. And guys, on his 15-minute, there was no room. He was in the middle of one of those zones, which means who knows? And from his entry, he had very little room to the one-to-ones. They created a giant bounce. So room to targets is such a valuable part of what we do. Triggers are down, pull back to the area, close below. Had about 4 ticks to trouble, chose not to take it because trouble was in the way. Solid job following rules. Triggers are down. There's the close below, nothing but room. And guys, look at that, $540. That's the easy one. That's the one that had room to trouble. That's the one that waited for the close. That's the one that had room to trouble. And guys, that's the easiest way to use the software. And then when you don't have room, I'll be damned, you get your ass kicked, it seems, more often than not. I probably shouldn't say ass, but I've already said it twice. So here we go. But guys, this is such a great lesson. No room to targets is a loser. Room to targets produces a winner. No room to targets, didn't take it. No room to targets, it's a loser. So you're going to start to see these as you do your own thing. What do I keep doing that's costing me money? Guys, that's your thing. And this is a really good way to talk about identifying your thing. Your spreadsheet has a spot for feedback. In this room, I hand you everything you need to be successful. I don't give you the reps or the study time to get successful, but I give you feedback along the way. And every trade that you present comes with feedback. And every time you look at your trades from the previous day, you'll see what you're doing that screws things up. Paul should go back tomorrow and say, man, I lose way more than I win when I trade into areas. That's his thing. And his thing is costing him money, so he can wake up every day looking to correct that thing. Let's see what we have. Triggers are down. Not a clear path either direction. F it, I'll take the trade anyway and go counter trend. Directly into trouble and I'll lose money. There it is again, guys. Recurring theme. Trading into trouble tends to produce poor results. Jen, weak bottom. Looks like it might have even been 4 triggers through. Pull back to the area inside of triggers. You get in on the way up, and you ride it up to trouble. Beautiful trade, Jen. All the momentum, room to trouble, perfect entry, great result. Nicely done. Out at trouble, and then when trouble creates a bounce, everything's still going up. You choose to jump in above trouble and get paid again. Nicely done. When you know where the market can react, when the reaction's over, feel free to jump in if that's what your plan says. 4 triggers below trouble, everything down, room to trouble, perfect pullback to the area, just on the other side of triggers. Jen justifies it by says, you know what? It's worth the risk. With everything down on every chart and this area more likely to hold than break, I'll just put my stop behind and hope that entry from the wrong side doesn't work or works. That is a calculated risk taken based on advantages. Jen, beautiful trade. Easy getting paid with that look. I keep seeing this. Legit, time will tell, legit entry for a long. Price breaks away, price pulls back. Paul, if you listen to the video, that is a momentum trade. That is the second trade in the plan. That's not a trend trade. Because your small triggers never roll. Language is important. But guys, this is an opportunity to grab hold of that momentum and go long. We'll talk about it tomorrow when he's present. Victor, the trend is up. You're on the weak side. Manage assertively. Room to targets. The answer is yes. Should have remembered Mark's lesson on trade getting better. I got out when price started sliding, but triggers were screaming up with momentum. Could have picked up 8 more points or 32 ticks. Manage lesson for me. So, Victor, there's your pullback. There's your close above. And it's a beautiful exit. There's a lot of money made there, right? And nothing said that market wasn't going to do what you wanted it to do. All the momentum, and that's okay. If you get mad about getting paid, if you get mad about a $300 trade, Nexgen has done their job. If you're like, damn it, I spent 4 minutes in the market and I only made $300, congratulations, you have a great plan. Because there's another 600 minutes of trading today. Maybe not. I made that number up. It was just a trend trade, Paul, trying to recreate, but your zone's changed. You would have entered right here with room to trouble. That would have fit the rules for a trend trade. All right. Who do we have here? Help me out. Who is this? Is this Master B? This is Sergio. All right. Good top. So first it's a weak top, then a termination, pulls back. Now it's a strong top. All the triggers are down, and that divergence is in the way, right? And those one-to-ones are in the way. And you said 67. So your trade is actually back here, isn't it? Where now you have the potential to break, Sergio, and the perfect pullback and out at trouble. So this is great patience. This is you saying, man, I don't want to trade into one-to-ones. I don't want to trade into a divergence low that hasn't broken. Let me be a little bit patient. The market always seems to give me what I need, and it did, didn't it? Came back and gave you the perfect low-risk entry and the ability to make some money. Nicely done, Sergio. That's great patience in that little moment of uncertainty. Good job. All right. As soon as I closed it, price fell to the downside. No worries, on to the next one. Who was this? Sergio, is this you again? Nubis, was this you? Cool, Nubis. Let's do something. Hold on. Did you show me the large chart? Okay, you did. Boom, boom, boom. So let's just focus on So you had 3 lines. Divergence, man, that took so long before that ever hit. So what did your large chart say? Did you have momentum? Yes. 3 out of 4 through, right? So the potential to break is there. So now we've got to go to entry. Large chart's done its job. Large chart's done its job. So let's talk about the entry rules. I'm going to buy or sell a pullback at an area inside of triggers, right? So there's your triggers. There's the areas inside of triggers. In Nubis, that is the perfect entry. Can I tell you that? That is the perfect entry. That is about as sexy an entry as you're ever going to get on a trend trade. So let's talk about something else. If the market can retrace all the way to the top of those triggers, I don't know if it will or not. Nubis, the very simple plan that I hand out every day, says that your stops until you get a reversal bar are 4 or 5 ticks beyond those triggers, which would put you up here at 62.05. Does that make sense? In Nubis, well, you didn't. You jumped ship. So there's a word that is going to foster success. Trust. That's it. It's trust. If you're going to take the trade, Nubis, trust. Sit on your hands. Relax. Let it play out if you're on simulator. If you're not on simulator and you don't have trust in your stop placement, you're going to struggle forever because your entry was great. Your large chart was phenomenal. And the only thing you didn't do is put your stop where the market shouldn't go. And what did it do? It hit your stop, right? And then what did you say? After it hit your stop, price fell to the downside. You say no worries. I say poppycock. You should be mad as hell that you put your stop in the retracement zone, that you got out of that trade before you ever gave it a chance to work. Does that make sense? Great entry, dude. That takes courage to hold your stop when the market's going against you. That comes with time. Cool. Same thing. You panicked. You were still in the loving embrace of rule number 3. Your opinion, your fear of the down, and that's okay. It's totally normal. So if you're on simulator, and it's up to you whether you are or not. If you're on simulator and you're terrified to take a loss, your life is going to get so freaking hard when you go live. Guys, one of the reasons that we have these very basic approaches to management in the KISS plan is because it teaches you to put your stop where the market shouldn't go, not where fear dictates. And it teaches you to move your stop behind the reversal bar. And it teaches you to get paid at $100 and $200 and learn how to get paid. And as you grow with the software, as you learn the software, guys, get as accustomed to taking losers as you are taking winners, because both are a very integral part of being a day trader. Triggers are down, room to trouble, pull back to an area. After it breaks below and becomes resistance, you take the pullback to the small triggers. I love it. I love this entry, Miss Trina. With room to trouble, you go down with it. You can't fight those small triggers if they're down, right? So you let it break. You let it pull back. You get in. Love this. Beautiful trade, Trina. Nicely done. How are you doing sticking to your plan? So far, so good? Lots of love. Okay. All right. So, Master B, I can read minds, right? I know exactly what you did. You said, hey, look, the market's going down. The momentum is strong. I'm going to jump the fudge in and I'm going to jump the fudge out. Is that fair? Cool. Good job. I don't know what I could tell you. You didn't tell me why on anything. You didn't tell me why you entered right at a fib that could have created a bounce, right? You didn't tell me why you got out at the next fib when absolutely nothing had changed with your trade. So if you guys want feedback, you've got to give me something to work with. If you just want to say, check it out, I'm kind of a badass with momentum and path, I agree 100%. You're kind of a badass with momentum and path. And Master B, I know you're at a point where you know what you're doing. You've done the study. You've put the time in. I love this trade. So because I'm a complete egomaniac and I want to appear smart, one of the things when you guys just jump in on these, do you remember that the phrase areas are bouncy? There have been a tremendous amount of people that have found an enormous amount of success, Master B, by allowing the back of the bar to get below the bouncy area before they enter, because it takes them away from that reaction zone. It takes them away from that likely to produce a bounce zone. That's all I can say. I can say you don't have synthetic triggers on this chart, so if you are looking for trend trades, you're shorting yourself. I can also say that your software produces divergence levels, and the MACD BBs are what make that happen. So your software is running calculations in the background already using these if you find them distracting like I do. But I do love MACDs, but once John automated it, it made life easy. All right, Nathan, weak top, odds favorable, 4 triggers through, perfect pullback to the area inside of triggers, third divergence is an exit condition. Perfect. Almost stopped out. 5 tick stop was enough. I love that. And recognizing 3 divergences in the same price range gives you the opportunity to exit the position before losses are taken. Nicely done, Nathan. Is that from this morning? Yeah, it's perfect. Did you take $100 on the first contract like the KISS plan suggests if you're following the KISS plan? You were loading chart. Okay, so this is just the read. I love it. It's perfect. And that third divergence is the perfect exit condition. And somebody did that on the KISS plan. All right, let's see where we're at. Good stuff, guys. We made it through all the pictures, except for the next pictures. All right, we got Miss Kathy. And Miss Kathy, I'm going to brag on you a little bit. Just so you know, don't you blush on me. All right, and sniffing pills. You know, I don't know what you're doing. Don't have any idea what you're doing without T3 indicators, but I want to see it anyway. Did you make money on that trade? I'm sorry, that was for sniffing pills. All right, Miss Kathy. So a trade is momentum, path, and entry. You had all the momentum. You had the clear path. Let's go look at your entry. There's your pullback to the area inside of triggers. And there's continuation down. So, Miss Kathy, you didn't make money on this trade? Never went where the market shouldn't? Everything went down? But from 68 to 61 is $140 worth of profit, right? Yeah, I know. That's still a $140 move. Right into trouble. That's a good spot to take some money. Go break even. But it's the perfect entry. Oh, but you didn't pull the trigger. That's what it is. So what happened? Mark fib on the small chart with a white line. You had a fib right here at the white line? From where? From what time frame? That's okay. If you had a fib with 2 divergences at it and you're not comfortable with that trade, that's cool. That's all right. But your large chart said, whoa, we're perfect. I like it. It's a great look. And if you're not comfortable, it's your right not to take the trade, right? That's your right. And I don't know if you're on Sim or live. But if you're on Sim, take them all. Let Mark sort them out. Right? Take them all. We'll talk about all of it. But I don't disagree. Divergence directly from a fib, maybe a confirmation bar. And it's a little different because you're not running those fibs on the big chart, right? Fresh off of passing your test, good job. So now you're hyper conservative because now it's real money. And you changed your plan because it's real money. Suddenly you don't trust the plan when it's not simulator. Funny how that works, isn't it, Kathy? That's why simulator's beautiful, guys. Muscle memory. It either is or it is not. And that's so normal. And I'm going to tell you right now, if you've never gone from evaluation to semi-live or funded account, your first instinct will be to change everything that you do to try to avoid losers. You forget that losers are a normal part of it, guys. Strong top, playing a tick off is good. It does move very fast. All the momentum, potential to break, perfect pullback to an area inside of triggers. Money, 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 money. Great job, Jen. Beautiful, isn't it? There's your pattern, my friends. There's your pattern. I love it. Great job, Jen. 2 trades here. First is not a high probability trend trade. Momentum is great. Only 2 triggers, though, but had a tight stop. Full profit, the exact same trade. Is this Adam? Second trade, momentum, 3 triggers. What's the difference? Divergence. That's the difference on the second one. And you still take it with the divergence, all the momentum, and you get paid. And when the second divergence prints, nothing done. That's $400 and virtually the same range. Nicely done, Adam. Nicely done. All right, termination condition reached. Smalls above the large. White bar. Open above. Get in. And they stopped you out, huh? They stopped you out, Phil? Counter trend, man. So let's take a step back and look at the big picture. And that was you right here. Okay. You traded into the outer band, didn't you, Phil? Let me go back and look. Nope, outer band's way up there. Am I not looking at NASDAQ 2588? Okay, it was all the way back here. No, 25. Hold on. I'm trying to find it. 25,588. 25,588. So is that one right there? Okay. Yeah, they just wanted the next level. It's the perfect look, dude. It's every rule met. They just didn't want to go. And then they still didn't want to go. But do you see how far? Wow, where'd it go? So here's my 2 cents. Do you see how far below that outer band you are? The likelihood of long trades winning, Phil, goes down dramatically. When both charts are outside of that outer band on the short side, my plan, if I'm going counter trade, if I'm trading view, says wait to get back inside at least of the outer band on the smaller, faster chart. Something that you'll notice a lot. This is essentially a strong trending market. And as long as you're below those, yeah, Not saying don't do it. You took it perfectly. Um, but definitely it's a quick profit scenario. Strong top, 4 triggers through, perfect entry, and it didn't work. Just didn't work. Nathan, I love it. And good job. You're extending that one in your head. Guys, they don't all work. They just don't. I would lose that one with you. 15-minute chart shrunk down to 1 minute for entry. I don't know, man, sniffing pills. Let me read what you said. Followed previous 5-candle 15-minute downtrend. So everything was going down and you just went down with it? Essentially, everything was going down and you went down with it. What a concept. This doesn't, I don't know how you guys trade this. I have no idea. Hour, 15-minute time frame. It amazes me that you guys trade like this. It really does. It makes zero sense to me. Doesn't mean it's wrong. It just means I'm spoiled rotten. And I've got very precise areas of support and resistance. And I think it's cool. I really do. I think it's pretty outstanding what you guys do without the stuff that I'm accustomed to. And I know there's more to it and there's stuff that I don't see, but because I work for Nexgen Software Services, I just don't have the insight. I'd love to have you with us. Get the demo, man. It's so precise. That's what makes it fun. You know that there is a free 7-day, right? Check it out. Play with us for a day. Most people that come to Nexgen are like, holy crap, I didn't realize it could be this easy. And it really can be. Perfect trade didn't work. Perfect trade didn't work. Adam, do you know how I know it's the perfect trade that didn't work? Either one. You can use TradingView or NinjaTrader. I teach them on both. I know it's the perfect trade that didn't work because my buddy Nathan is only taking perfect trades that don't work. Not really. They do work too. But guys, losses are a normal part of a positive equity curve. Losses will happen. And I'm going to say it again. If anyone ever tells you, no, I don't ever lose trades, they're full of shit. That's like being in high school and the masturbation question, right? There we go. HR nightmare. Sorry. All the triggers, weak top, pulls back to the area. And guys, and Nathan, you're not showing entries and exits, which I'm guessing that you're just kind of simulating and marking things, right? But I want you to see something, and this is so important to me that you see this. If your entry is at 69, we'll say 69, 61, 75, when you get the reversal bar, guys, it's like 5 ticks of risk on a trade that fails. It's $125. That's unheard of in futures trading. So one of the things that I do want you to pay attention to on these when you're not actually taking them is where the entry would have been and where the rules-based stop would have been and how small of a loss this is in something. And that's okay, guys. It's okay to take losses. And then Nubis, before Nexgen, you would take $700 to $800 losses. With Nexgen, 150 to 200. It's a huge difference. I love that. Thank you for saying that in the room. And in sniffing pills, it goes back to kind of what you said. It is precise. The methodology is very precise. All right, Miss Michelle. Got it fast without thinking. What should I have seen? Well, your entry, let me see. is right here. So you actually waited for the reversal bar, right? That's cool. Pull back to the area. You waited for a little confirmation. Confirmation's not always a good thing, Michelle. If you know, and let's do this real quick. And I know that you saw it. Did you have momentum? Absolutely, right? Best of the best. Did you have a clear path? 4 triggers through trouble? Absolutely. Best of the best. Michelle, did you have the perfectly identified, without question, highest probability, sexiest entry Nexgen could ever teach you at an area inside of triggers? Why the hell are you waiting for confirmation? The only thing waiting for confirmation did is it gave you more risk. That's it. That's the only thing confirmation did for you. Michelle, there is a time where confirmation makes sense. This is where getting in right at the area, having your initial stop where the market shouldn't go, and then when you get that confirmation, putting your stop 2 ticks above that reversal bar, because the sellers have taken back over and gotten in line with everything good about this chart. This is one of those times where you could have virtually no risk on a trade. Virtually, 4 or 5 ticks, maybe. Because it's the perfect trade. Because it's the perfect trade. Analysis and hours on the market beat any indicator? For you, sniff pills. For you. Me personally, I want to know exactly where the market is most likely to bounce and continue in the direction of the trend. My indicators tell me that. I want to know when I have the advantage of momentum. My indicators tell me that. I want to know when my path is clear. My indicators tell me that. I want to know where the market's likely to go. My indicators tell me that. Different strokes for different folks. I don't knock anybody's methodology. But I'll go toe-to-toe with anybody that tells me that just watching a market makes you a better trader than knowing exactly where the market is most likely to continue. Different strokes for different folks, not opening a debate. Does that make sense, Michelle? Once you get the reversal bar in the direction of your trade, that's what I like. How do I do it better? How do I do it better? That's it. Man, we've had so many people come through that are like, I've got a pretty solid methodology, but my risk is too high. Nexgen helps you reduce that. I've got a great methodology, but I can't figure out where the hell to get out. Nexgen helps you with that. And that's what I like to do. How do we build a symbiotic relationship with what's already working? So Michelle, good job on the trade. You read it perfectly. You entered a little bit late. And I can't tell, but it looks like you just added just a little bit of risk to it. And once you get the reversal bar, you can kind of redefine where the market shouldn't go and have even less risk. Good job. Good job, Michelle. Good to see you posting in here. Aaron, same thing, brother. Oh, and you got it. You got your first target, you bad mother sucker. And then out break even. Did you get lucky or did you follow the plan, Aaron? I want to make sure we know the difference between the two. Did you get lucky or did you follow the plan? You followed the plan. So don't you give that to luck. That was you. That was you taking a sniper entry that was so stinking good you got paid on your first contract. And you turned a failed trade into $100. Remember when we talked and I told you that's possible on crap trades with great entries? You just proved that to be true, my friend. Great job. Don't you dare give that to luck. That is kick-assery. That's you taking care of business following a plan. Sniffing pills, I got you right now. Let me make sure that it goes to it. They were saying that it might not have been working. There we go. So you can sign up, man. It's 7 days. It's 7 days right there. Get your name, number, all that good stuff. Yeah, and then someone will reach out. They'll get you loaded. And then, dude, just start playing in class. Start posting those pictures. By the end of the 7 days, you'll know that you're onto something good. There's no doubt in my mind. No doubt in my mind. And then as you evaluate, man, ask a million questions. Ask a million questions, brother. I will answer every one of them. Nubiz, there it is in detail. The KISS plan. So check it out. I don't know, man. Talk to a client advisor. I try to stay away from sales because I'll charge you what it's worth. They may give you a better deal. I'm so not good at sales, man. I'm really good at patterns. I think there's prices on the website, but just talk to them. You've already had interactions with us, man. We're pretty good people. We're gonna do you right. So, hell yeah, works for everything. Works for everything. It's just patterns, man. The market doesn't know what it's trading. Whether it's gold, whether it's NASDAQ, whether it's S&P. Trina is one of my gold traders. Does great things. Her hunk, Wayne, does everything in gold. So, yeah, we got people all over the place with it. Crazy right now. It is crazy right now. So check it out. Nubiz. 2 charts. 3 rules. Management plan. Dude, I hand you everything you need. All the way from stop placement, first targets, when you move your stop the first time, second targets, everything. It's all outlined. There's pictures about what it means to have the rules met. No, it didn't. No, it didn't. All right. That's a good comment. Are you ready? Let's talk about divergence. Good observation. Are you okay? So when the market comes down, and reaches 69.57, this blue line doesn't print until 2.5 bars up. That's when the calculation all comes together. If you looked at your dad's chart, let me pull it back up. Man, thanks, Master B. I need this for an example. Where did it go? There it is. So behind the scenes, and you don't even have to do this. Your dad's being old school. When these pivots are made, it runs a comparison against these MACD BBs. And whenever, see how this pivot's higher and those MACD BBs are lower, that's a divergence. So what happens is you don't know about it till all the way up here. So price doesn't reach that divergence line, Nubiz. Price creates divergence lines. And then let me show you how the market reacts to created divergence lines. Boom, boom, boom. There was a good one. Where did I see it? This is a pretty good example. So right here, price creates this divergence line. And what it is it's literally a line in the sand where the buyers told the sellers to get bent. We're stealing your momentum. F you, we're going up. And when the sellers come back, there's a good chance the buyers are going to tell them to get bent again. And that's why these behave as terminations. In the same way, the sellers stole the momentum from the buyers. And when the buyers came back to it, the sellers just opened up on them. They said, we told you. We told you. So they're never created at the pivot. They're created a few bars later. And it has to look like this for it to be problematic. And look at that. Get bent. We told you. Seriously. I make up stories about the market. Awesome. And see how it was created right here? And price never touched it until, holy smokes, it's still in play. Price still hasn't touched it. Boom. Once this divergence comes in, then it's out of play. So price creates, doesn't reach. That is such a good question. I like that question. And Master B, thank you for throwing some MACDs in there for me. Let me see where we're at. But the one thing that Aaron's trade did, and Nubez, I want you to latch onto this one as you're brand new, is he took the perfectly defined entry and he had a target sitting at $100. And what Aaron was saying is what the KISS plan teaches. The whole goal of trading is to get paid. And again, I'm going to do it again on the calculator. If Aaron makes $100 4 times a day, that's it. Feels like nothing, right? That's $400 a day. Over the course of a trading year, that's 6 figures. Your account, no, he was short. Pull back to the area inside of triggers. Your account doesn't know how you get there. Your account doesn't know. So traders are so adverse to taking small profits because home runs, right? I want children to sing songs about me. The reality is the whole goal of day trading is to get paid. Figure out how to do it the easiest. Get on base. What did confirmation do? It cost Jen a little bit of money. So Jen, same thing with the perfect entry. Confirmation doesn't help, it hurts. When everything is perfect, confirmation is fear. Confirmation is fear. It means that you don't believe this has a better chance of winning than losing. That's all it is. It's like when you grab the dashboard when your husband's driving even though he's never had an accident. You don't trust he's not going to run you guys into a wall. So when it's perfect, it's okay to treat it as such. Good job, Jen. Great looking entry. They can't all win. I wish they could. I want that for you guys. But they just can't all win. This is 1 chart or 2? This is 2 charts, right, Papa? All right, let's see what we did. It did. Aaron, I like that. It does. It takes a lot of wrong entries to get that one right. But once you take a deep breath and simplify and you stop worrying, it's easier, isn't it? And a lot of you will back me on this. When you allow it to be simple, trading isn't nearly as hectic as you think it was. Everything is down, nothing in the way. Pull back to the area, perfect entry. Oh, stops in the wrong spot. All right, Papa, you ready for a management lesson? You're going to like this, guys. What's the whole premise of what we do? The sellers are in control. The buyers fight. That was their highest fight point. The sellers take back over to produce your trend trade, right? Is everybody good with that? That's what we do every day. Trend, fight, resumption. That's the whole methodology of a trend trade. So wherever the buyers lose their fight, Papa, wherever they can't go up anymore, that's your initial stop placement. You've got to put it above that pivot high. If you put it, where did you put it? You got stopped out. You were in at 26. You were out at 49. Cool. So late entry, a little bit, but your stop belongs here. And if you put it where the market shouldn't go, it's nothing but money for you. And if it's too much risk for you, and that's a lot of risk, right? You're 2 bars late on the entry. You should have been in at like 32. Should have been in at like 32. But if you can't put your stop where the market shouldn't go, the market's going to do that all day long. They know where the scared people don't want to put their stops, right? Not that you're scared. Yes, Nathan, 100%. So the basic methodology says put it where the market shouldn't go, above the pivot high. And then once they start cranking down, right, and they commit and you're in, getting close to targets, put it wherever you want. But until they get away from your entry, that's the rules based. Get it above where they lost the fight. Well, where did it break above? Pull back, return. Right here, it turned into resistance again. So, yeah, that bar could have kept you out. That bar could have kept you out. So it's a late entry. What did the late entry do? It created phenomenal risk. What did phenomenal risk do? It had you put your stop where the market shouldn't go. Just because it's a late entry doesn't change the idea of where the market shouldn't go. All right. Waited for support to become resistance. So let's take the picture again. Support, price breaks, becomes resistance. Market pulls back to resistance, bar above, turns back into support. That's where it becomes resistance again, right? All right. So there's your pull back to resistance. There's your close below. You didn't wait for the bar to close below, which means that you never gave yourself a chance to see where the buyers fail. How's that? Same lesson. Same lesson. You didn't wait for the pullback to resistance. You didn't let the bar finish. Well, you entered at 26, which means you entered once. Golly, stop. It means that you entered when this bar finished, right? When this bar finished, you entered. Is that fair? Cool. So it didn't pull back to resistance after that bar, did it? It never set up a trend trade entry for you from where you entered. Which means you're relying on the previous pivot. Does that make sense? Now, if you had waited for it to come back and waited for this bar to close down, you have a new pivot. You've got a fight and a fail, right? But since you didn't have that, since you just jumped in, it's the previous pivot. Okay, good. Good stuff, man. It's these small lessons that prove to be helpful. And it did. It went right where you wanted it to go. Same trend trade, caught the second wave, pulls back, closes below. Easy money. Good stuff, Papa. And that's the same thing, right? The buyers fight. That's where they fail. That's where entry is met. Initial stop here. And if it's really going to go, it goes. Great stuff. And do you see how, and your stop was where? Around 70? When the market is just freaking out like this, that's a huge stop, man. I know it's a huge stop. That's a 20-point stop. That's an $800 stop. But it just because it's a big number doesn't change where it belongs. And your large chart told you, man, they wanted to go down. Good stuff. Good stuff. Great lesson in there. Thank you for that. I really do. I appreciate you guys and the lessons that you give us for the entire room. All right, Phil. Same trade. Everything's down. Room to trouble. Pull back to the area. Close below. Formed an opinion that the area would break despite the weak side and outbreak even. Oh, Phil. That's all right. That's a good lesson. That's a good lesson. You guys remember when I said wherever price is in relationship to those triggers gives you a heads up on how to manage? Man, Phil, it's a painful lesson, but it's a good lesson. We've all done it. Smoking the hopium. Hoping the market does something that the indicators don't say it's more likely to do. We've all done it. I am not throwing stones. think that's where we started. All right. Miss Trina, down, transition, room to trouble, pulls back to the area, becomes support, breaks below and turns into resistance, and you got stopped out, right? You want to hear the children singing praises? Did you get the lesson on the previous pivot? And you also got the lesson that this isn't a pullback to resistance, right? This is what turns it into resistance. We skipped one step in the trend trade. Good stuff. Good lessons. Good lessons. And then you came back and got it. And from the weak side, Trina, wouldn't it have been just 1,000 times better to get paid at 500 instead of 529? Because it's the weak side, because this is so likely to create a bounce. So good lesson there too. Phil, you're not alone. Except Trina did it better. Just saying. What's the 3? 1. So you got in at 37, took quick profits at the bar, at the triggers up. I like it. Another one at the outer band. And yeah, third one for me from the weak side, 100% HVA. Good stuff. Accidental buy. I've done that once or twice. Direction is down. Transition. Area becomes support. No shorts. Clear path. Pulls back. Close below. All right. And you pull 15 points out of it. Nice job. Great job getting paid. Take care, Sergio. You had room, and you're just forgetting to get paid. You want to see something crazy, Phil? John did this to me. It's okay. That $20 that you gave away by not getting paid from the weak side of the triggers, if you expand that out over a trading year, you're giving away $5,000 from that one point giveaway. Or that's 5 points though, right? 2505. So that's actually $100. It adds up, doesn't it? This is what John used to do to me. When I would like, oh, I want a bigger move. I want a bigger move. I hope that area breaks. He did that math and I was like, oh shit. And when you realize, and you will have this realization, guys, God is my witness. Phil, do you have any doubt in your mind that the next trade is coming? Trina, do you have any doubt in your mind that the next trade is coming? Boaz has no doubt that the next trade is coming. And he's okay getting paid. And that's, it takes a long time, guys. My mentality when I started with the software was I better make all of it at one time, because who knows, maybe the stock market will close, right? I don't know, whatever the reason was. Boaz, momentum, path, room to trouble, no need for confirmation. Great first target, diversions from the fib, great reason to exit. Great reason to exit. Great trade, Boaz. Large triggers cross the fib level. I like it. Clear path, all the momentum. First entry on the pullback, I don't know where that is. I see. Second entry on the pullback, and down it goes. Good stuff. Pivot, stop out. Odds favorable momentum, 66. So you're right here, Jen, trading directly into trouble. Absolutely no room. And you pulled one off. Good job. Just no room. And you're right. A better entry would have been up here. You pulled it off. Guys, I'm not the trade police. That's not my job. I don't want that job. But if you ever start posting in my room that's so far outside of the plan that you've been showing me forever, I might mention it. Don't get upset with me. But I might say things like, wow, I've really noticed that almost none of your trades fit the plan that you were trading so consistently for so long. Did you notice that too? And a lot of times you guys do. A lot of times you guys are like, well, yeah, I've made some modifications, right? I've decided that I'm cool trading without direction or without three triggers through, or I've decided that I'm cool trading directly into areas, or I decided that it's all right to fight divergence at a 1-to-1 from an area outside of triggers. And guys, that's your right. I'm not here to tell you what to do. Nubis, I'm not sure that I've ever had one. And Jen, if history is any indication, and if patterns in humanology, I don't know, are an indication, then we can surmise that the potential is at least there to go off the rails and to get frustrated and to have to completely recalibrate when you go off the rails from your plan. Now, it doesn't mean that it's going to happen, but it's nice. You guys ever had your spouse kind of go, hey, you're kind of being a dick or a jerk, right? And you're like, oh, I didn't even notice. And then you reel it back in before it's too late. I'll do that every now and then, but I'm not policing your trades. That's not my job. I don't need that job. Man, we made it through all the pictures. Let's just read our charts. So my background is green, but my triggers are red. Do you guys see? I just don't have momentum. I don't have anything pushing the market right now. And not only do I not have momentum, I'm literally straddling a fib. So I don't have a clear path either direction. My background is green, but my triggers are red. Guys, this is the I choose to do absolutely nothing look. Let's go look for a different market. Now this one has odds favorable momentum. And this one hasn't reached an area. And this one has an area inside of triggers. And unless they hit those yellow 1-to-1s, my pullback to an area inside of triggers fits the plan. Do you guys see how quick that happened? First, it's momentum. All four triggers below the fib haven't reached the 1-to-1. If I get a reversal bar, my rules say I can sell a pullback to a midband, an area inside of triggers, and my stop will have to go just above 72.25. Does that make sense, new users? That's your look. Am I going to wait for confirmation? Hell no. That is the perfect look. Am I cool with the stop up here? Absolutely. This is the perfect look. So if they decide to give us an entry, people were stealing them, Trina, apparently. Not cool, right? There you go. Oh, they missed me. Let's see if they come get me. You're welcome. Victor, that's tech stuff. If John Novak wants them password protected, he'll do it. Does it matter, Nathan? So 2 questions. One, does it matter? Are you sure? From a strong top or bottom, not mandatory, but better. I've got 4 triggers below the area. This is the perfect trade. Uh-oh, I didn't have a stop in. So let me put my stop where the market shouldn't go. 69, 67 would be the first target. 65 would be the second. It's the perfect trade, Nathan. It's all the momentum. It hasn't reached trouble. It's a pullback to the area. It's stop where the market shouldn't go. $100 target, $200 target, and now we're at the mercy of the market, right? Now it either wins or loses, and I don't know which. And Nubis, I got your question just as soon as we find out if we're taking an ass kicking or a victory here. Whew, it's still in the retracement zone. Pulled right back to the area inside of the retracement zone. That feels good. Give me a reversal bar. I'll go 2 ticks behind that reversal bar per the KISS plan, unless I get stopped out, in which case I'll just be out of the trade. That's it. Guys, they don't all win. That sure was a good look. All right, Nubis. So you lost that one, Boaz. I would lose that one every day, every time it presented. I love this question. As long as the rules are met, Moonwalk, I will. Remember, I can't force the market to give me the rules met, which is one of the reasons if you guys are relying on me to trade live, you're going to struggle a little bit. All right. Nubis. No separation, right? Is that momentum? And we'll try and do it. Moonwalk, we're going to have like 45 minutes. Cool. All 4 triggers above divergence. That's a clear path though, right? Awesome. Well, I'm only obligated to pull the trigger if the plan is met. And that's the challenge, is very often we could sit here for an hour and not get the rules met, which is a great lesson in itself. And then, Nubis, do you have an area inside of triggers for entry? Here's your triggers. Let me ask again. Do you have an area inside of triggers for entry? Nubis, I'm going to do it again. Hold on. That's way bigger than I needed it to be. Uh-oh. Nubis, there's your triggers. Do you have an area inside of triggers? And I'm doing it like this, Nubis, because it literally can be this easy. They're below the triggers, right? Where the market shouldn't go. So I'm missing momentum. I don't have a definable entry. Could this fall under high probability? Nope. And it really is. And I know it's ridiculous, right? But it really is that simple. Learn those 3 concepts and you'll know when you're taking the best trade. And then you just wait. So check it out, Moonwalk. They just wanted to go a little higher, didn't they? It happens. It happens sometimes. So let's see what else we have. All right, there's NASDAQ. We'll see what it does. Nope, wait, another one right around the corner the right way. I agree. I'm not, Michelle. How many have worked? How many high well, then why would I get fearful if I don't even have complete data? And Michelle, remember that 90% of your trades are probably going to be medium probability. This one right here on the NASDAQ produced a winner before it failed. I believe this one produced a good winner, medium probability. So remember that there's going to be really good trades, and there's going to be medium probability trades, and there's going to be all these different trades. And if you go back and see what happened on the KISS plan, you're likely to win. That's the 50-50 trade. That's the medium probability trade. Um, and I'm rooting for it, Moonwalk. I'm trying to find one for us. So what we do, he's good. Dads will look out for their kids no matter what, Nubis. We can't help it. So the perfect trade, Michelle, when each indicator on every chart agrees with the rules for the trade, means that you have momentum, clear path, and entry, right? That's the best of the best. A medium probability trade means that one of those advantages have gone away. Now, the 50-50 on the KISS plan means that the path isn't clear, but you still have momentum and entry. But even if you don't have momentum and you have two, you can take and manage. So this learning these three and committing to these three opens the door for all sorts of stuff beyond it. And then you just kind of wait for it to come together. We have the momentum, we don't have the path. That's it. So now I'm waiting. I don't have the momentum or the path, so I'm waiting. Don't have the momentum or the path, so I'm waiting. And when I say 90% of the day is waiting, and Moonwalk, this is why I always say, don't wait for me to take trades to learn it. But if the rules are met, I will jump on it like it's going out of style. But we just keep talking about it because it's all about the chart read, right? And Michelle, that was a big loser. That was I'd take that loser all day long. It fit the plan beautifully. The people in charge wanted to go up 6 ticks higher than I wanted them to go. I took the loser. Now, when you grow with the software, you may just say everything is still perfect. I'll get in with the reversal bar. But I can't do that because it's not on the KISS plan. My job is to be 100% committed to the KISS plan and only pull the trigger if the KISS plan rules are met. Only 2 triggers, all the momentum. It's just not a trade yet. Not a strong top, divergence, doesn't fit the plan, so I've got to pause. If the area is really going to break, it'll break. If it's going to hold, it'll hold. And until it does one or the other, I just have to sit on my hands. Does that make sense? That's the worst part about trading, is you sit around and do nothing. And you watch the market do this stuff, and you're like, ugh, I knew it was going to go up there. No, you didn't. Oh, I knew they were going to go down from there. No, you didn't. So you just sit and wait, and you say, I don't know what they're going to do, but I know what they need to do to give me a trade. I know what has to happen. Either this holds and I get odds favorable momentum up, or this breaks and I get odds favorable and a clear path down. And until one of those happen, as a brand new user, I have to sit on my hands. And then as an experienced user, I start to see more and I start to do more. But without momentum or path, this could go down, but it's going to go down without me. And without a clear path, this could go down, but it has to go down without me. And they're trying. They're fighting right at a fib. And this is the NASDAQ. Things change fast. Take care, Nubis. Good questions today, man. Good questions. Successful trading comes from that 6 inches between your ears, I think. So many trades with this system, you'll let one go just to see it work. Yeah. So now I've got tail into momentum. I do have a clear path. I've got one spot where the market's most likely to bounce, but then it comes down to the fib, and I'm like, well, crap. My areas are on the wrong side of triggers. I don't have separation between the two. And if I wait for confirmation, I don't have any room to make money. That's why the NASDAQ's tough, guys, because it moves so fast you get excited. There's all the momentum. What don't I have? I don't have an area inside of triggers. If nothing else, it's fun to see. With all that momentum, the market continues down, right? With all that momentum, nothing seems to be able to stop it. For you guys that are in tune with momentum and path, there's a lot of you that'll take little snippets out of these really strong moves, 100, 120 bucks, and then just get back out. It's called a chili dog. Most of you do it wrong because you don't have plans. You think that it's just jumping in, but there is a plan for it. It was written by a Nexgen user. And then look at that. There's your reaction. There's your reaction right at fibs. Remember when I said you'll understand where the market is likely to go? Pretty cool, right? That's exactly where it went. From Fibonacci to Fibonacci. And now we're in the same position. Is it going to hold? Is it going to break? I don't know. They don't send me a memo. Michelle, Head and Shoulders has nothing to do with my plan. I don't know if it has to do with your plan. You better get that shoulder checked out because it wasn't anywhere near. What does this have to do with this down here, right? Just be in the moment. Be in the moment. Guys, I'm not here teaching you how to get in the market. Let me find at least something, right? It's easy to get into a trade. It's easy to just go, hey, you know what? I'll buy the market because it's a blue fib. And if it works, awesome. And if it doesn't work, well, that's a lot of pain, right? This is not a trade. This is down, and those are down, and this is down, and there's no reason to believe this market is done going down. And I'm going to take a giant loser because this is what happens when you trade opinions. What's happening in the moment? Does that make sense? But this is why I'm not going short, because that area could stop the market. And a pivot stop out right at a fib with no triggers through very often pushes the other direction. This is what happens when you learn how to read your indicators. And now I'll just say, you know what? If I don't get a reversal bar down, I'll never enter this trade or never exit this trade. This is going counter trend. That is a hell of a good reason to go counter trend. I can't go long anymore. I see a pattern on my small chart that says because of this divergence, because of these fibs, because of that pivot stop out, price is likely to at least make it back to the mid band. And now the runner's on, and now I've got a trailing stop. So is this a trade for new users? Hell no. It fights everything. Will I take that trade because the pattern is present? Because I've studied? Because I understand it? I took it this morning. When I can't go long anymore, get back over here. When I get my pattern in play, hell yeah, I'll go the other way. I've put my time in. If you haven't put your time in yet, you're going to struggle with this. Aaron, it's counter trend and extremely dangerous and will probably drain an account quicker than it puts money in it. Here, watch this, Aaron. Take a picture of my chart and tell me what you see. And if you can't find a reason, it's probably not your trade. And I'm not trying to be smug or ugly. There's no rules met. None of your rules, right, Aaron? None of the KISS plan rules. So let me get the distraction off real quick, and let's reverse engineer it. Aaron, if you don't have momentum and you're at a fib, is there anything in your plan that says look for a short trade? No. That's it. That's the end of the road for you, Aaron, because you're following the KISS plan, right? Because you're learning to read your indicators. You're waiting to look at patterns. You're trying to figure this out. So, Aaron, a loss of momentum, when it looks like this, is the small chart showing me a fight. A pivot stop out at this is showing me that the buyers are pretty solid about it. My smalls back above the large is a good indication. And if you were going to take a shot from the strong side of those triggers, you've got a fighting chance. Now, what new users do is they go short, long right here, and they get run over. And then they go long right here, and they get run over. And they go, well, hell, if it's not a long, it must be a short. And they get run over. But when you've been doing this for a while, you say, oh, look, we reached a mid-band from a weak bottom, and the gap theory is in play, and it's likely to close the gap here, and you get the hell out of your trade. And now right here is where they're going to make decisions. So, Aaron, I never do anything on accident. But just because I can doesn't mean you should. Not yet. And that's one of the problems with the people that teach outside of what I teach. I teach the basics. Guys, I teach you to find success without a lot of moving parts. That's it. Michelle, price reaches the mid-band. The large triggers were more than a full bar away. Price is more likely to close the gap to those large triggers. That's all it is. That's what denotes the mid-band as a termination condition. Thanks, Master. You too. So it doesn't say go short, Michelle. A full bar. See how it made a full bar and it didn't hit them? Not space, a full bar. A full bar. And that's what does it. But what does it mean, Michelle? It doesn't mean go short. It means don't take that long. That's what it means. Don't take this long. You're probably going to get run over as they go to the bottom end of the retracement zone. Does that make sense? There you go, Aaron. That's your first counter trend trade. Good luck. There's a reason I don't teach it. When you catch a top or bottom, you look like an absolute rock star. They fail more than they work. They do. They fail more than they work. So why do you want it in your plan? If you're not making money easy yet, why do you want something that fails more than it works in your plan? And you don't have to answer in the room. Please don't. But ask yourself, if that's a trade that loses more than it wins, why is it in my plan? If not having momentum can make an unpredictable move up, why would I trade without it? If not having a clear path creates more losses than wins, Why am I still trading into lines? And the idea and the reason, and I know the reason because I've fallen victim to it myself, is that we want all the money. So check it out. Hit the term, second higher divergence, failed miserably. Gave back everything I made on the other one. Directly into a termination condition. If I tried to go short over here, pivot stop out, it failed miserably. I gave it all back. If I tried to go long again because of the pivot stop out, failed miserably. It's a completely different look. And now it's a strong top and it's odds favorable. And I need 3 triggers through. Get through there, large trigger. And I've got areas inside of triggers. I'm going to break the 3 trigger rule. But Moonwalk, do you see how we can define right where the market is most likely to bounce at the areas inside of triggers with momentum? Now, this is only 2 triggers through and doesn't fit the KISS plan, but it is all the momentum. It's coming from a termination. There's my reversal bar. There's my pullback to the area. And there's so much wrong with this trade, but that's the very core. That's the very core of what we do. And I'm going to close that out for a big honkin' loser. Because with only 2 triggers through, it's less likely to win. With divergence, it's less likely to win. And even though the entry looked perfect, this is not a high probability scenario, and this is a very avoidable loss. Does that make sense, everybody? And that's why when you learn the easy one, you start to see the things beyond it. You start to do these calculations really fast. The reason I don't have a challenge trading the NASDAQ is because I am so in tune with what I'm looking for before it ever happens. I know exactly what I need to have happen, and I know 100% that that's not my trade. And now there's my tail end of momentum. 4 triggers through. You could put a limit order right at an area inside of triggers. And then it doesn't come, and my areas are on the wrong side of the triggers, so it's no trade for me. But that's how fast it happens when you start from the very basic. And guys, again, I won't tell you how to trade. Aaron, if you want to learn HVA trades, start taking pictures, post them in the room for feedback. I will talk through the rules incessantly. You're going to want to build a market flow chart, and you're going to want to have the checklist, and you're going to want to make sure that you're following the rules, because if you just go short arbitrarily, you're likely to lose your tail. Good stuff. Good stuff. That's it. To see setups in a second, you need time on the pond. Michelle, price reaches a mid-band. Large triggers were a full bar away. Do you see it? There's the gap theory the other direction. Pretty predictable. It really is. It's a pretty predictable move. And then there's 2 triggers through. 3 triggers through, but we hit the fib. Not my money. %90 of your day. Let's see what the reaction is. Let's see if they want to keep going down or if that termination condition creates problems. Might have got a few ticks out of it if you broke a rule. What do you guys want to talk about? We still have a little bit of time. Second higher divergence is a good exit condition if you did try the short directly into the termination condition. And now they're making decisions. Look at the fight. Pretty cool, right? But without rules met, there's nothing to do. There's no reason to lose a fight. Momentum, path, uh-oh. Did we get the pull back to the area inside of triggers? Momentum, separation, all four triggers above. Midband's not quite a termination condition. Probably a loser right there. Darn it. That was a pretty horrible setup. Divergence from a 1-to-1. But if you took the first entry, you made some money. Once you get that lower pivot with divergence, maybe a small loser. And if you try to jump in when it's already over, there you go. Using the Karnak trading system. Triggers are up. Room to trouble. Where's my most current bar? Uh-oh. Here's my pullback to support. Triggers are up. Weak side of the triggers. Room to trouble. Pullback to support. So what do we need to take the trade? Need a close above, right? We would need a close above triggers here to defend it in a court of law. Awesome. Welcome, Zhao. Is it Zhao? Am I saying that right? Glad to have you with us. I'm telling you, we've put a lot of work into trying to be the best. We really have. So feedback is always welcome. Not quite above triggers. Not yet. So now we have 56 seconds to think about it. Now we have 56 seconds, 48 seconds to think about it. Mostly you trade gold. There's a lot of gold traders. Well, I teach people how to read the Nexgen indicators to make your gold trading easier, should you see fit. We got 29 seconds. 29 seconds. Are they messing with us here? Victor, you put that bad juju out there, man. There was your close above. Let's see how much risk that close above gave us. 2,300. Where's our trouble? 4,800. Do we want to take a portion off at the first sign of trouble? Fits the rules, doesn't it? It's all I can do. Me personally, I'm not a big fan of $2,300, but we're going to see if it works. All right, Miss Trina. Triggers are up. Strong side. Pull back. Close above. Money at trouble. Outbreak even. Beautiful trade, Trina. You caught the first one. Still up. Pulls back. Close above. That one stopped you out. Dagnabbit. Still a good trade. Pull back. Close above. And there it goes while annotating. Jerk faces. But that was it. 3 in a row. 2 out of 3 winners. 66%. My rules are still met, right? That was a good one. Pulls back, close above, still support, still up, still strong side, still room to trouble. Here, we'll take 3 off here. And guys, now we're just waiting. Does that make sense? Now we're waiting. And here's a cool thing. If I get a close above, which is a new signal, I can put my stop behind where the sellers failed and reduce a lot of risk. We'll keep it in place right now. But what's changed? Nothing really. My large triggers are still up. My small triggers are still above them. They're just trying to figure things out. Large chart still looks pretty good. Just trying to figure things out. Could it lose? Absolutely. Could it win? Absolutely. Do I know? Absolutely not. We'll come check on it in a minute. No momentum. Son of a gun. Nothing to do. NASDAQ says no momentum. Nothing to do. Crude oil says no clear path. Nothing to do. I apologize, guys. I can't seem to get the market to do what we need the market to do, huh? Crude oil went from support to resistance back. And they're just trying to figure out what they're going to do, guys. Someone's going to win this fight. This is literally buyers and sellers going after it. And we probably just lost our trade over here. Nope. Pushed right back, right to support. If support holds, you'll even see it over here. Let's see if there's a close above. That's always fun to do. Does it make sense? It's either boring or exciting when you watch someone do this. 3, 2, 1. Oh, it didn't give us a close above. So we didn't get a new trade yet. Didn't get a new trade yet. But they definitely know about that support, don't they? Do you guys see the fight between the buyers and sellers? I don't know who's going to win. My large chart says up. My small chart's coming off of support. All I can do is wait. Man, this was boring. Mark didn't have any rules met and couldn't trade, and I wanted to see live trades, and he took a live trade and it fit the rules, but it didn't do anything. This is boring, and God, trading is boring. Fight, fight, fight. Look at the difference. All of this happening on Renko, and that just looks like it's doing a bunch of nothing, huh? Looks like it's doing a bunch of nothing. Still haven't had the rules met for another trend trade long. We'll know in 32 seconds. Guys, are there any questions? We're about done for the day.